Hey folks, Dan Frio here with your market update for August 26th, 2025. We have two huge pieces of information coming in this morning. We had home prices, what they did. It kind of shocked the market again. And then we had the federal chair member getting fired by President Trump. Does he have the ability to do that? Well, that's what we're going to talk about in today's video, how those two events will shape the market today on what goes on with these things over through here, folks. So my name is Dan Frio. I come out each day to explain to you guys what's going on with mortgage rates and the whys behind it. So let's get to today's show. So what we're talking about in today is I waited a little bit for this data to come out, the Case-Shiller Index. This is going to tell us what home prices are doing nationally. Now, I really don't care what they're doing nationally, but I have to give you this data because everybody talks about home prices. But I've been saying home prices are going to be flat over the last 2 years. Well, the numbers are starting to float in that way. But what you have to understand is when you have markets like Austin and some parts of Florida and things like that that are down 5, 6, maybe 10%, when you're looking at these numbers saying the markets are flat or up, that means other markets have to be up to compensate for the differences. I hope you understand that part of it. So don't always look at the glass half empty, because with this data, it's looking like the glass is half full a little bit today. So let's get over to today's news. Here's what we saw in today's news. We had the Case-Shiller Index. So month over month, home prices were completely flat as a pancake. But year over year, they started deteriorating. They're still, though, up 2.1% nationally. But again, like I said, if one market is down substantially, that means another market has to be up for the overall market to be up in general, over 2% for the year. Now, month over month, we were up previously 0.4%. Flat as a pancake this time. So we're going to go over that in the economic calendar here in a second, but I want to go over to this with you guys. Short-term rates fall while long-term rates rise as the president fires Federal Reserve member Cook. Now, what Cook did is supposedly, it's an accusation at this time, she committed mortgage fraud before she was even a member of the Federal Reserve. A little bit of an overstretch. I'm going to have to say yes on this one because I said to you guys I would critique each president as is, and this one, I can't say I'm going to have to go with this one, nor am I going to go with this. It's also saying the president right now at this point is trying to take equity positions in companies. I'm not for that either, folks. And here's a company that they focus in on right now, Lockheed Martin. And the reason why is Lockheed Martin, which makes most of the revenue from its federal contractors, is basically the arm of the U.S. government. Well, if they want to take over the Lockheed Martin, instead of taking an equity position, why don't they just ask for lower prices? Why do I say that? Well, here's Lockheed Martin's CEO pay. $24 million. It doesn't stop there. If you go to this article and you scroll down, these are other companies that they're saying, well, these are companies we might take equity positions as well. Northrop Grumman, General Dynamics. Well, let's look at theirs. Northrop Grumman. Well, Kathy over at Northrop Grumman is the CEO. She's making $24 million. General Dynamics CEO is making $24 million. Maybe you go to these guys and say, why don't you just kick in a little bit of your bonus money here and cut prices for us? Just an idea, folks. You can also see in here, I'll pick on this a little bit, just so you guys understand the tax code. Okay. If you see this $24 million, they make half of that money right through here with stocks and other compensations, with maybe stock options and things like that. Here, let's go to that one, and then we'll go to the other one. What do they make? They make $1.7 million in salary, $16 million in stocks. $1.7 in salary, $13 million in stocks. $1.7 million in salary, $12 million in compensation with stocks. Why? Well, stocks are taxed at a different rate. So if you hold your stock for over a year, you only have to pay capital gains tax, which is 15%, I think, at the last time they did it, versus whatever tax bracket these people would be in, which would be really up there. So maybe you make the tax code a little bit different so these guys can't avoid paying taxes on this money if the issue is they're not paying enough in taxes, the millionaires and billionaires. I don't write the tax codes, folks. You guys at the government do. So that's my spiel for the day there. So let's get over to how the markets are reacting so far. Let's get over to the CNBC to do that. Let's see what the markets or the equity markets are doing. They're probably in the red or completely flat at this time. They are flat as a pancake. We don't have any indices up more than 0.1. So the markets are just flatlined right now here. Let's get over to what the 10-year Treasury is doing. It's up just a tad. Let's just click crypto. Crypto is getting hammered. This thing was at 120,000. Join me for Stock Talk Tuesday today. We're not going to talk Bitcoin. We're going to talk some other investment options that you have. So join me on Stock Talk Tuesday, where I hopefully help you understand how stocks, bonds, and cryptocurrencies actually work. Let's get over to the economic calendar we have for the week and let's say for the day. So let's get over to this. Here's what we have for today. And this is why I waited to do my show just a little bit later than I usually do. We had core durable goods coming coming in. Last reading was 0.3. It was expected to come in at 0.2. Came in at 1.1. That's good news on the consumer level. Let's go to durable goods orders. It's down month over month here, but we'll focus in on the core. And this one's hugely volatile, so we'll just focus in on the core, because last night, if you look at the durable goods orders, look how fluctuated they are. 16 to -9, -6 to +16. So we're not going to really focus in on that. We'll focus in on the core. Okay, so the other piece of the puzzle we got today is Case-Shiller Index. This tells us what home prices are doing. So year over year, home prices last reading was up 2.8. They expected it to be up 2.8. It was actually, or 2.1. It was actually up 2.1, right what they expected. Month over month, flat as a pancake. So the markets are really starting to flatten out right now, folks. The good news here is we have better mortgage rates. We have more and more houses coming to the market, which is going to stabilize the housing market. So that's about all we have for today there. And then on Thursday, we have the jobs numbers, initial jobless claims and continued claims. We'll see if the continued claims continue to climb and climb and climb, meaning people are having a tough time getting jobs. But if it stays steady, that means if you're losing your job, well, people are finding it a little bit, a one-on-one to getting jobs back. And then the GDP, the PCE, this is the piece of the number that we're really focusing in on this week. Yes, the jobs numbers, but also the PCE. Why is this so important? Well, if you go over to what the Federal Reserve really monitors, or why they were created for two reasons. One was price stability, aka inflation. How they measure it is with the PCE. Number two is the unemployment rate right through here. So we get kind of these numbers every week on Thursday, what the unemployment numbers are doing, not the official unemployment rate. But this week, we're also getting the PCE, the inflation numbers. So we'll go over to that and show you where those numbers are supposed to come in at. The PCE, year over year, last reading is 2.6. We'll see where it goes this time. And then month over month, I think it's not there as well. So we'll focus in on the PCE on Friday. That's our inflation numbers. Now let's get to the earnings reports that we have this week. Yesterday, we had 3 companies coming out with earnings. All of them hit on revenue, and all of them hit on earnings per share. So far this morning, we have 2 after the close. Tomorrow, here's what we're going to get. We'll get NVIDIA's earnings reports tomorrow, and this is after the bell. It will be a market mover, because the markets, especially the NASDAQ, focuses heavily on NVIDIA, on where that's taken the NASDAQ at the time. So the Federal Reserve, here's what they're focusing in on. They control this. They focus in on here. I just brought this up. I don't know why. And then the last but not least, what's the Federal Reserve going to do at the next meeting? We're going to go over this every day, because this is hugely volatile. What this is it's a CME FedWatch tool. It's a tool that actually tells us, or predicts, what the Federal Reserve is going to do at the next meeting, basically the next meetings throughout the next year. If you go down through here, now there's an 85% probability that they will be cutting rates. How do I know? Well, here's the federal funds rate across the top. Here's the meeting dates over here. So the federal funds rate currently, if you go to the federal funds rate thing, it is 4.25 to 4.5. Okay, so if you go back to the chart right through here, 4.25 to 4.5, here's where it would be. So there's a 14% chance it's going to stay there, but there's an 85% chance that they're going to cut by 0.25%. Then the next meeting, it's kind of up in the air, but they're expecting 2 to 3 rate cuts this year. I'm saying 2. I'm going to say there's one at this meeting. Then everything's going to be based on how the numbers come in between now and October. And then if the numbers are stagnant, they'll probably keep numbers stable at that time. By that time, hopefully we start getting really all the data we need from the tariffs. So as that data compiles through, I was expecting it's going to be another 3 to 4 months for that. That'll put us right about the end of the year. That'll give us a key point on where the inflation and all these tariffs are taking us. So that is our report for today, folks. Now you might ask, who am I and what do I do? So my name is Dan Frio. I'm actually a federally licensed mortgage loan officer. That means I'm licensed in all 50 states as well as Puerto Rico. So if you're out there trying to buy or refinance, I'd love to help. Okay, so here we have a slogan here. So it doesn't matter where you live, I can help you out. But our slogan here is one application, one credit pool. We're going to compare your loan to over 30 different lenders. Now, how do we do that? Well, here's how we do it. I work at a bank that holds a federal license. So it's a bank and trust. But the unique thing about this bank, and one of the reasons why I joined this bank, is we're set up with 33 other lenders. You might ask why? Well, it's to help you guys out. So if you're looking right now to buy or refinance, what are you really looking for? And why are you watching this video? You're looking to try to find the best mortgage, or how do you get a mortgage? How do you shop around? We can do all the shopping around for you. So here's what we do. You put in your application right through here. I'll get you approved here at the bank. And then here's where the work comes out. We're going to start helping you shop around. We have 33 lenders we can get rate quotes from. We can offer you programs that they offer, like right through here. If you're looking to buy a house, we have a $7,000 down payment assistance program. You can apply for this. It's income-based. So click the video. What it's going to do is send you off to a video that you can watch, and it'll actually give you a map where you can plug in your zip code. It'll give you how much income that you could make. You can make that amount or less and possibly qualify for this program. So don't walk away from $7,000. It's not a linear property, making it really easy to refinance. Talking about refinance, if you're in the position of you're like, Dan, I'm at 7.5. I'm just waiting for 6.5 or 6.25 to refinance. Well, let me know what you need. Click the refinance button right through here. What's going to happen is when the rate hits exactly what you're looking for, I'll get you on the phone. I'll text you, email you, call you. We'll go over the numbers. We'll go over the cost, the fees, the savings. If it's enough for you, we'll get the paperwork started and lock you in. But let's say you already got some quotes out there and you're like, Dan, how can you compare my best quote with everybody you're offering from? Well, you just go to the loan estimate review. What you're going to do is click that, upload your loan estimate. What I'm going to need is you're going to need at least 3 weeks until closing. But we're going to compare and see if we can get you better fees, better rate. If we get you both of those, I'm hoping to win you as a client. So that is our report for this afternoon, folks. I will be back for Stock Talk Tuesday at 2 o'clock Central Time. We're going to talk stocks, bonds, cryptocurrencies, how you can invest or be a first investor if you're new to investing, and how to learn how the stock market works and all these things. If you're looking at this, we're going to help you understand all these and how you can also invest in these. Not only do we talk real estate, folks, I'm here to help you learn about stocks, bonds, real estate, cryptocurrencies, just to help make your life a little more let's say it this way. I'm hoping to help you create generational wealth for you and your family. So my name is Dan Frio. If you need some assistance when it comes to buying or refinancing, please reach out to us. We'd love to help you. Thanks for watching. I'll see you later today at 2 o'clock on our Stock Talk Tuesday, and then once again at the closing bell. Have a great day, folks. Hope to hear from you soon. Bye-bye.